bull bar, and you can see if a strong close like bar one, suddenly the bulls are buying the close of it, they're betting against the market. Either there are a bunch of traders are stuck here, they're buying low and trying to get back to where they bought. Good morning, everyone. This is Rose. Today is November 12th, Tuesday, 1 minute after 9 a.m. Eastern Time. Welcome to the Brooks Price Action Trade Room. Just housekeeping items. Let's take a look at the news today. Today is Tuesday, so there's not much going on here until 2 p.m. We have Fed member Neil Kashkari is going to speak. So that's kind of important, but that's late in the afternoon. Nothing really scheduled. Is early this morning, so at 10 o'clock, Algo's probably going to think the 10 a.m. some kind of news is released, so we might get some volatility, but nothing really scheduled, so we don't need to worry about everything. All the news is for this week is starting tomorrow. CPI 8:30 a.m. Fed members are several different Fed members starting is in the morning, 9:45 all the way to the afternoon, and then a Treasury statement in the afternoon. And then Thursday, big news again, jobless claims and PPI final demand. Is if you're trading oil, you have the status report coming up at 11. Jerome Powell is scheduled to speak at 3 p.m., followed by other Fed members. And then, of course, Friday, we have the retail sales. You have import, export, and industrial production and business inventory. So starting tomorrow, we're going to get a lot of probably starting some kind of volatility, but today not much going on. Okay, so we don't need to worry about that. Now, yesterday we started above high of Friday, but we couldn't stay above the high of Friday. So you can see right here, bar one is a bear bar, but if anyone already buying, stuck pretty much there, and they're probably going to buy to break even, just get back up again, and that's why you're getting bar two, bull bar, and you can see if a strong close like bar one, suddenly the bulls are buying the close of it, they're betting against the market. Either there are a bunch of traders are stuck here, they're buying low and trying to get back to where they bought, or we're going to have a opening range, whether it's 3 bars, 4 bars, 6 bars, 7 bars, 10 bars, 11 bars, whatever, could last only 15 minutes, half hour, or 1 hour. So you have 3 bars right here. So down on this, up on this, down on this again. And bulls are trapped there. And you can see right here, bears are selling. When a bar does this, you have a high there, and you have a mid, and then you have another high, right? So to me, the bulls exited there, and you have an outside down bar, strong. So I'm selling the close of this bar right away, and I'm going to put my stop there. I'm going to go for 1 hour. And some profit taking at half hour, maybe a scalping. You could see they've been scalping with 4, 5, and 6. And then we closed the bear bar 7, so that is the news bar. So market sees this as a leg 1 and a pullback and a leg 2 and a pullback and a leg 3, and you have a wedge bottom for 8 and 11. Nothing's closing below 1 hour. I'm not seeing continuation, and I cannot linger. And you can see that these sell. There's nobody selling. Obviously, everybody's taking profit at the moving average. Bears got low 2 there, and the low 2 is failing. So you have micro double top here, and bear sold is neckline 2, break of the neckline. Expect you can also do a measured move. So you can definitely get the breakout of the 3rd bar and go for a measured move and be out. But obviously you're not going to sell there, you're just going to sell here, so you get a better price. Now that you have 3 legs down and the low 2 failed, and bulls are now buying, you have the high 1, high 2 set up right here. So you have the first time the bar went above the prior bar's high, and the second time it went above right there. So you're entering 1 tick above bar 11, okay? Because bar 12 went above it. So what you're doing is you're trailing your buy stop above bars until you get filled, and bar 12 is filling you, but it closes bearish, so I'm sure it gave everybody a quick heart attack there. And then, but you shouldn't be exiting out. You have a wide stop and you're looking for at least 2 legs up because market made 3 legs down. So you have also 3 legs here. When you have a wedge, what are you looking for? Well, let me see here if I have the tool. So you have a wedge here, right? And this is the final leg. So basically you're looking for market to come down, okay, to this right here. But this is for obviously bear selling. What about the bulls? So same thing, right? And you have the third leg right here. So what are you looking for? If you enter with the second entry long, you're looking for this right here to be tested and then quick pullback, and then you want market to get back here. If the gap here is too strong, okay, then you're gonna see either a quick micro wedge top or double top and reverse back down, which can create a bear flag. And look at right here. So you have a leg 1, pull back, leg 2, pull back, leg 3. Now we're going up, right? So we're going there. We're probably gonna go and test around here, right? So it actually went up. So you have the big down and kind of a big up and confusion, and now we have a double top. We ended up going and testing starting point of this wedge, which was right around here. So is several legs down, probably sellers are waiting there. And the first sell, really nice, but you are in a trading range. So you got to be careful here. Any strong bear bars will be sold just like any strong bull bars. Any strong bear bars will be bought just like any strong bull bars will be sold. Right, so there you go. So we are at the top of a trading range. Most likely is bears waiting there because they've sold pretty strong. But problem here is that there was a bit of a gap here, and then the bulls closed that gap. So how strong are the bears? Low 2 failed. Now you have high 2, and is this going to break out? That's what the bulls want. But when you have strong 3 legs down like that, probably sellers are waiting. They're going to try to sell twice. That's your first sell. That's your second sell, right? You don't want to sell this right away because you're in a trading range. We're testing at to 50% of the trading range and lower. So if you divide this trading range into 3 sections, right, at the bottom is your buy zone. They're buying again. So first time the bears try. Now these bears will try again because they probably most likely sold the close of 15. But when you sell the first sell, you're going to have to sell at the high again. So this on its own, bar 15, a trading range bar, okay? Although it's the outside down bar, but your context is you're in a trading range. So probably it's a leg in a trading range. So when we test the highs again, most likely these bears stuck here will sell. And they're going to try to bring it back down to where they got stuck, whether it's the close of 15 or the low of 15. So we've done all of that. So I'm looking for several legs down. Bar 18, possible reversal. If we're not going to break out, we're definitely going to reverse. So but not a good, bar 19 is not a good sell signal bar. I'm looking for a better bar. I'm in a trading range here, so not all that great. 1, 2, 3, 4. I generally look for 3 bars inside a strong range bar like 15 to fail at the highs and the bears to sell. So bears are selling, but bar 20 is not all that great. But bears are in a mission. Now you get the bar 21. You gotta expect another continuation on a leg down. Why is that? Think of it bar 21 as a follow through, but really it's momentum. It's telling you, listen, we need to sell. We need to get back to the 15 close because we are stuck there. We were too naive to sell the 15 in a trading range, right? So we sold higher and we want to get the average or the full break even. So expect the follow through, which is bar 22 is the actual follow through, and a pullback and a next leg down. So you have 2 legs down right there, right? And market, it's also, think of this as 3 legs, leg 1, leg 2. Doesn't matter if this bar goes 1 tick above the leg 1, that's still leg 2 and leg 3. So it's kind of a wedge, but it's a very complex one. But we come down. Or right here, you have leg 1, pull back, leg 2, pull back, leg 3. So you have also wedge there with the 20, 22, 24. Micro double bottom 24 and 25, lower low. And so it's trying to go up, not the lower low to this, but in this area. So we took out the 15 low. Bears made money and they're exiting out now. but you're buying against 1, 2, 3, 4, 5 micro bear channel, probably sellers not so far away, even though we have broken the channel line right there, right? So it doesn't matter, they're probably going to sell because you're stuck in this trading range. It is a triangle, and we're making a bunch of double tops here. So bears see as, look, we've already made a high. We're not able to get above the high of yesterday. So it's been 18 bars. It's probably, this is the high of today, and we might actually mark it up and target this area. So I was long up until bar 30, 31, 32. I did not like what was going on here. We're not breaking above anything, we're not taking out these lower highs. We're making now lower highs, and bulls are not getting good entries up because you're going against this right there. So that means bears are looking for some kind of a double top and bear flag to sell. So maybe 1, 2, 3, or 1 and 2, double top 26 and 31, and 2 consecutive bear bars, a good close below the moving average, and that is first entry short. 28 went 1 tick below. You have a quick rally here, pull back, and the first entry going breaching below the low of prior bear bar, and then the second pullback. Bulls are giving up, so you have a really good bear bar closing 31. I'm looking for an entry, so I exit out of my long, enter with short. So I am looking for 32. I sold the 32. I can quickly put my stop there, but not a good place to put the stop. Why? Because we haven't taken out this low. So this is good. They can come and run my stop. So better to measure from there, right? And it extends your profit taking. So I'm going for this target, and here it comes, and market is coming down. This is nice, but remember, you're still in a trading range. Most likely buyers down somewhere down 8 low, 11 low waiting. So I'm expecting market to come to the 1 hour. We did come to the 1 hour, and bar 40 closed below it. This is where we got into a stop order market, which is great. You also have another channel here, right? And the first bar that breaks the channel, you can put a sell. Either you can sell at the high of that bar, or the underneath the bar, expect another channel down. Look, there's another one, and it's like 3 bars right there. This is a great entry to sell, right? So you're getting a bunch of bear flags. This is an implied bear flag, but it's coming down. 40 closed below the 1 hour, so now I'm targeting 2 hour. In fact, we actually had, I believe, almost 3 hour. But you can, at that point, measure move target. So I can maybe take that, since that's a body, or I can take this, but we never got there. I measured it from here. So I put the stop right there. I measured it from here, but unfortunately, I didn't get full cover of tagging of the measured move target, but it was close enough, and I was done with that. Because why am I done with that? Why am I not expecting follow through selling here? You got to look at the whole chart as a bird's eye view perspective. Okay, you're getting only, if you are looking at a chart like this, okay, look, I'm not saying go and spend a ton of money on a huge monitor, but you are not doing yourself a good service if you're only focusing on this. You need a bigger context, right? So the reason why we trade S&P or the futures chart, because of the continuation, okay, so we're trading only one asset, one market, and we're trading the US session. So that means what happened before is important. Market has been very bullish, but every time, look how strong the bull channels were, the breakouts, right? And it turns into a market cycle says a strong breakout channel. It's going to go into, probably trading range. It breaks out, so it's probably going into tight channel, bull channel, and then maybe a broader channel. But this one is keep climbing after making some trading ranges and trapping the bears trying to sell, keep marking up. So you got to see the context. So what we're having here is a much stronger trading range. Okay, we did not have a trading range this strong before. Look at these, maybe here, but higher lows. Now we're going higher, but now we're making lower. So what you're seeing here is a value buy. Okay, bulls are still buying here. Now, after hours, we closed around here, which is this one. Okay, although it looks a little bit. Hang on a minute. So, all right, so this is the 15-minute. So we did come down and closed right there. We went sideways. Okay, came down, made a double bottom, and then now we're trying to. It's an expanding triangle. So you have that, and most likely take this. Bulls are trying to probably get up there and test that trend line. So that means Globex range is very tight. So we can actually double this range to the up or down. Nobody wants to sell here. The experienced traders, they don't like to sell lower, so they are looking for a pullback. So that means is if anybody is looking for continuation, but this bear flag might be failing here. So that means they're looking for a pullback into some area. That area is here, which aligns very well with that trend line, expanding trend line. And we could definitely get up there. So I'm going to use the Asia low and Asia mid session as the apex of this triangle. And I'm going to look for bulls to break above the Globex high and then get up to somewhere here. And then I'm going to look for sellers again. Now we'll see. Bears, what if we can't go? What if we start to stay below the mid-Asia, which is important range for banks, okay? It's the first range of the day, okay? Starts before midnight, before London session. So this is an important range. That's why I mark it on my 15-minute chart. And anytime we're above it, I look for bullishness. Anytime we're below the mid-level of the Asia range, I look for bearishness, okay? So this is the London high. We have already went up and tested the London high. So US session started already. So it can start 8:30, doesn't need to start 9:30. Yes, the RTH starts 9:30. But a lot of news and whatnot. Market gets U.S. session gets a little bit hectic right around 8:30. So you can see that we've tested it. We didn't really go and test one tick above. Bulls can still go and test unless we make a double bottom and start to close bear bars. Then I'm going to target this area. But we're in the middle, but closer to the high of Globex. I really like to see bulls actually get a breakout, get us up here. So we might need to go and break above the Asia high. Okay. So you can see right here, if you based your measured move based upon the Asia, look, we came very close to the measured move target right there. And now I'm going to do the same thing for the upside. So if we break out, I'm targeting this mid-range, 37.75, and I'm targeting 43. So let's go bulls. At least let's get the first scalp target, 35.50 area. There might be some sellers there, but if we get above it, we're probably going to mark up more. So now we're in a trading range. Price is 60, 27, 75. I got to turn these yellow. I like the current price yellow, but anyway, I'll do that later. All right, so we're going to open up around here. So let me get my levels. Very important is before the market opens, you're going to get your levels marked. So here is the high of yesterday. Here is the close of yesterday. Okay. I'll move this for now because that's going to be the open of the day. We're going to open up somewhere here and I'll adjust it. Here is the low of yesterday. Okay, we do have a ledge that we left behind. Market could still target this area. We have been trying to get down to that level, but seem to be maybe what if we sell? What if we come down? Well, market definitely wants to get back to the 6,000. we had a hard time making new highs, and I'm going to talk about that in a second. Here is the daily. We tested another target. We've been up and up and up, actually. We could still go up, but on the hourly, this is last week's range right here. Okay. I measured the last week's range, Monday, Tuesday, Wednesday, Thursday, and Friday. And we're so high. If market really wants to mark up the prices, okay, they need to break above quickly. Like this, if this is a value buy, okay, and momentum bulls are still holding. I understand, but the breakout is really bad. So we need another breakout bull bar. We need bull bars on the hourly chart, taking out the yesterday's first hour, and on closing bull bars, then the momentum bulls will take their stop from underneath here, most likely to put underneath this higher low. But they should never have it there, because if we start to come down, we're going to run those stops. But there are buyers here because we have a really good breakout here. Most likely, even if we come down to the moving average, there will be buyers. Now we can come down. That's where the 6,000 plays a role. We could test around the 6,000, bounce again. That will give us a 1, 2, 3 wedge bottom. Yesterday's bar 1 low, bar 4 low. Today's first hour, the second hour low, and then we could reverse back up. So, or we could become bullish, go up, make a higher high double top, and then make our way down, make a lower high, and then come down. I don't know. So we'll see about that. We are at the resistance right now. I need to see a first hour close really bearish with a strong club bear body. Then I would expect the second hour to test it slow, and that could get us down somewhere here. Now we'll know about that on the Globex chart because we are at a critical level, key level. I call these the mid-Asia. This is midnight open for US, so it's important. That makes the key level for me. So we are right there, and the market is deciding. We have an outside down bar, bear bar. We have a double top, maybe triple top, 1, 2, 3. So if we start to close bear bars, we could definitely come down and test this pin bars low, and then look for buyers, maybe go back up, but that would form a lower high, and then we could sell, and then we would have a bear bar on the hourly. And that can bring us down to the ledge and further down to 6,000 before we reverse back up. We have quite a bit of gaps. We closed this gap. Now we went back up. We're at again, some kind of a expanding triangle. We're right at the apex. If we stay below the apex of that triangle, we'll come down. We could make a wedge bottom with this, that, and maybe somewhere here. So I think it's going to be an inside open, inside of the yesterday's range. We'll see a flag here. They tried to break out at the end of the day, but they sure failed. Didn't do all that great. So I told everybody I'm no longer trading this. This is just too much. I expected bulls to go higher and test this right here. And this was the area I wanted to be tested, which we did, but it was just too late. It was after 4 p.m. There's no way I'm trading that. So I ended up not trading anything and just stopped trading right around here. So I sold here, I bought here. So, and then double top, you do have to need to take profit there. Bulls were looking for a cup and handle, but unfortunately it failed. Once we take out the neckline, 24.25 low with a strong bar 34, expect a follow through selling. This is your small trading range right here, right? You can double it down if you like. That will give you 2R. That's the easiest way to measure for rewards. You have a huge bar here. Look, bulls got stuck up here, right? They kept buying and buying. They got stuck above 24. They got stuck above 29 and give up bar 34. They try to buy, scale in. There's no way. Once these lows are taken out, you got to exit out of this because this is going to sell. But anyone who's still holding, they're scaling in. There's another one. Now it's the second time they scaled, and now bulls are upset and they're looking for maybe we can buy from the low. I said watch 2 points or 5 points, 2-point buyers right there, and then a 5-point it actually bar closed right around there, so it's a 5.25, 5.25. So the buyers started to enter from the prior low, looking to get back into this gap again. So what you're looking for is a retail trader, a strong bar like 48. And if you were stuck up here, maybe up there, right? You measure from there, we got an 80% probability right here. We were long and we took profit. Now the 60% probability, they haven't gotten it yet, okay? Even on the pre-market session, they didn't, but this is pretty much done. But if you're trading this session and you're still holding, you're basically waiting for a market to whether either get on the 24 high or the 29 high, and we could accelerate right there, okay? Because that is the 60% probability. If you want to learn more about this, go to the brookstradingcourse.com, okay? Go to the brookstradingcourse.com and type London and search and watch this video. This is Al's presentation at a major seminar hosted by Tom Hugard, I believe. And go watch this. And somewhere around here, Al actually talks about the how to scale in, step multiple times, and what kind of bars to look for. That bar right here, bar 48, is this bar, okay? And that is that actually went right back up and gave us a 60% probability. We had the 80 right here. They might be still going for 60, and we'll see. But watch that video. It's free. It's available on the brookstradingcourse.com if you don't have access to the trading course. But obviously, you should get the access to the trading course. Anyway, all right. So we did open inside. I'm gonna get rid of this. Obviously, I'm not stuck. And I'm not one of those bulls looking for that 60% probability. We already got our target there, and the market went sideways. But you do have a gap here, and bulls kept that gap. You have a more than 20 bars sideways. It's going to break out somehow. It did. Now it's coming back down. Bears trying to close the gap. That means they have to close a bear bar somewhere around the 78 open or 77 open to close that gap and continue to sell. That could create some kind of a head and shoulders pattern. Left shoulder head could go back and make a right shoulder, and they could sell. Bears see a bear flag here. A bull channel like this, lasting this long, too many bars, could be actually a bear flag instead. So I'm counting 1, 2, 3, undershoot and overshoot. And there's no follow through for the bull bar 78. So either they're buyers here and they're going to prevent this gap from closing, or we're going to close the gap. We're going to come down and test around 76, 78 lows. Bulls will buy again. That could make us bounce and form that right shoulder. Bears are looking to bring market down around this area, but good luck with that. There's a gap open here, and these bulls will probably going to try to defend. All right, so we have bar 1. I'm waiting for bar 1 to close, so I can position I guess I could do that right now, assuming this bar is going to close bearish. So that's the open of the day. So you have maybe wedge top, double top, lower high. Bears trying to close a bear bar below the open of the day, below the close of yesterday. There's not much of information here. If you're trying to trade here in the middle of this trading range, it's a very difficult place to open any trade. Think of this as yesterday's range as your trading range. You're smack in the middle of it. Best way to buy and sell, okay, either wait for price to go up to the upper third or come down to the lower third, okay? So, all right, so we're above the 50% now, and we did not close anything bearish. You can't sell. So bulls are still trying to get back to the high of 25 or 29, or the heart of, or the apex of this triangle right here, right? So here we go. Selling began with bar 34. So we might be targeting the 34 open or the apex of the triangle, which is 37.75. 35.50 is my target anyway. So you want to take some profit there if you're already long. But you can see how market is still trying to push higher. Apex of the triangle is just around there. Or no, that won't be accurate, but that would be accurate. Doji is not much of a that's a one tick body, not much of information, but we are now above it. So strong bull bar. It's trying to reach this line right there. So I start from this is a document that I read online, and I get my levels from there. It's published. So it's so basically it's a study. It starts 7 p.m. Eastern time, 1900 is, and then is 1900 to 2400. So so basically it's midnight, 7 p.m. to midnight. I measure, that's the range, and gotta get rid of this. Oh, I didn't want to get rid of that, sorry, guys. That was the, we can definitely test the 37.75. Yeah, which is right this line. That's where we're trying to tag. If we get above it, then we're gonna test yesterday's high. So market is trying to become bullish, but first we need to go and test the 37.75 and then get above it. So we are right now testing. I said we're probably going to test the open of 34, which we did now, so that's good. They're taking some profit there because it's the breakout of the triangle, but there's not much room here, so I would probably hold this. So we reached that target that I marked pre-market. Can we go further up? I mean, it seems like that's where it's trying to go. Or there's a bit of a resistance there. If I take this as an overshoot, that is it. So you can have your, sometimes you get these overshoots. So we should definitely tag that line. Bull's trying to close this bar as high as possible with smaller wick, but there's not much time left. 2 seconds left this bar to close. It's got an upper wick, and you know why we have that upper wick, because of bar 34. So it is the breakout of the triangle area. So some machines started to take early profit. If we do close another bull bar, taking out most of that upper wick with bar 3, then that's it. That would become the momentum, and we could definitely tag here and go higher. So I'm still expecting bulls to try one more time, going a little bit more higher, at least tag that trend line, unless this bar fails and then starts to close bearish. Is at the breakout level of bar 1 high, bulls are waiting to buy. So if we do pull back, is probably buyers at 60.33 waiting to buy. Bulls want to take out the 1 high, but we are reaching the upper third of this trading range, so we know there are some sellers waiting there. They sold several times, in fact. And then if you based upon your trading range with this, they bought at the lower third, so they're marking it up. So we're just about there, almost there. Back to the breakout point of high of 1. Let's see if there are any buyers there. So if this is your range, right, so I'm going to remove that for a second. Look where we are. So think of this as your boundaries, right? So it's 100%, 33, 66%, 50 in the middle, 33. So you could see buyers at the lower third marked it up, and now they're testing the boundary line. Just to show you guys the levels to make that a little bit prominent. So here's 3. We are above the 50% of this entire range. Is they want to get back in here, probably go to the mid-range area. But we have nothing closed above the boundary line. So sellers are eager here, but let's just wait because buyers did buy. You see bar 3 came down to the breakout point of, I said, above bar 1. There might be some buyers waiting there. Bar 3 comes down and bounces very quickly. Now, if we close a bull bar, we could go higher, but if we don't, then where can we go? Well, let's see. We have maybe a leg here, pull back leg 2, pull back leg 3. So bears want to come down and test the bar 81 low, bar 1 low, somewhere around here again, but they have to keep closing bear bars and close this negative gap. So this gap right here stays open, okay? If bears fail to take out the 2 open, we could still go right back up. But if we do close it, then we're definitely coming down and testing the 81 low. I don't know if we can test the bar 1 low, but we might. We just need to keep closing bear bars. So, and this is happening because bar 1 wasn't a bull body. If it was a bull body, we would not have pulled back this much, okay? So now everybody's scared and they're like, wait, we were going up. Well, yes, we were going up, but this is a trading range. We're open within the range of yesterday. So therefore, you got to divide it into 3 sections and see where we are. We are right at the boundary line of the upper range. So this is a sell zone. This is do nothing. This is a buy zone. You buy somewhere down here, somewhere in the 50%, do nothing zone. You take some profit and you leave a runner. Your stop is somewhere down here. You're targeting this level. So those who bought down here yesterday targeted that level and they actually got a nice tag. The only problem for them is that none of these bars 2 and 3 close the bull body. So now you're getting bears excited about it. So they're trying to close this gap, come back to the 50%, close below it, and they want to come down and test here. So that puts us into a trading range. So if you were still long, if you were long, I said take profit around 35.50. We couldn't really get to that trend line. So it's kind of a bummer, but it's a morning price action. It's not over yet for bulls. They're targeting somewhere in the middle. So they're targeting this area right here. I'll mark it. And eventually I'll add it to the template. So, but we need bull bars. Get those bull bars, then we're gonna go and test this. If we start to close bull bars, that's gonna be my next target. There's a trading range here. You can also measure that. And one of the reasons why we're also taking profit there, because that was the breakout of the trading range is projected up, and that was their target. So either you got your target from there or there, and now you know. So now not able to close the bar 2 above that boundary line, you can see profit taken accelerated. But if we do close above this boundary line, we're going to go up here. We might even go tag that 2R. Bulls want to close the gap here. There's a bit of a gap here with bar 34. They've tested the 34 open, but no bull body close yet. So What about bears? Can they sell? Well, I need to see them come down and start closing bear bars below the open of the day, that gold line. And then once I start to see bear bodies, I want to see this 50% of this trading range violated, and then I will look for bears to come down and test this area. We broke out of the Globex range with the first 15-minute bar. We're back to where we broke out. Are they gonna collapse back in into the key level, which is right here? Or are we gonna close this 15-minute bar in about 9.5 minutes above the Globex range and continue to go higher? So it's important, and I can see the weakness there. Bears are showing some weakness here. Ford did not close that gap, needed to close bear body somewhere around the 2 open. So we do have a negative gap there. So if we don't get this bar inside bar 5 close bearish, bulls will take over, or they will try to go and test a high again, which is too high. But if they do close a bear bar, then you know what could happen or what will happen. So we have a somewhat of a weak, very weak breakout is pullback here, and the market is deciding if this is a good enough pullback. It is kind of a 2 legs. Think of this as a down, up, down. So this is the second leg for bears, and we're stuck inside the bar 2 range. So what does that mean? If we get 3 bars to downside, that's a 3 bear bar sell failure. Bulls can come in and go and test and close a bull bar and test somewhere up here. Bulls trying to trap the bears at the lower third of trading range bar 2. That is the outside bar followed by an inside bar. So lower third, that's your micro trading range within a bigger trading range. So if you're looking for an entry, expect bar 2, okay, lower third buyers, and those buyers did show up. So hence bar 4 lower wick. If they close this bar 5 above the midpoint of bar 2, we're going to go higher. We're going to go and test upper third of bar 2. So I want to see this bar close bullish. I might quickly buy and expect the high of bar 2 tested. But if it fails, not interested at all. Because I'm kind of late. I should have put a buy order at the lower third. Limit buy, I would have been already scalping and then leaving a runner. So if you buy in the middle, I'm not so sure. Not without the close of the bar, I'm not interested. So the midpoint of bar 2 is 33.50. 60, 33.50. I need a bull close above 33.50. I get that, and I'm going to have an interest from bulls wanting to test the high of 2. Limit bulls already bought it. So they're scalping a few points because they know they're at the middle of this trading range bar, which is 2. And some will say, how's that a trading range? We have a breakout and it closed on its side. Well, look at the behavior. You got a breakout here from yesterday and 2 legs down and a horrible breakout, no follow through. And now you have 3 bars inside stuck of bar 2. So you're in a trading range here. Okay, small trading range. And you're in a bigger trading range, mid-range. So it's very difficult to think that there is a stop order market. No, it's a limit order market. So bulls buying and scalping. So you have no choice but to scalp a few points. Since ATR is 4, it's not 425, so it's only 4 points. The half the ATR is 2. So if you did buy here, let's do the math. Say you bought right there, that's right there, more than 2 points. So you had a 2-point scalp there. If you do the math, that's all you had. And that's why we're going still sideways. Now, this bar can close bearish, but that doesn't mean that it's going to sell. It's a 3-bar failure within the range of bull bar 2. Bulls can show up here. But 3 bear bars is, we could still go sideways and down. Bulls want to go and test the open and the high of bar 2, but I don't have the trigger. I need 33.50 to be breached with a bull close. And there you go. So the bulls started to show up there. But I still need the bull close. I can't do anything here. As far as I'm concerned, bears can go sideways and have another go and test the low of 2. So I rather do nothing here. Yeah, lucky you guys. We ended up getting the TR trading range open, which is fine, but it's kind of pointing up. So if we start to get bull bars, we can definitely test the 2 high and break out. So let's just give it a minute because we're only 3.5 minutes away from 10 o'clock. Bears closed a bear bar below the inside bar, so they want this right here to be tested. This is their target. This is why I'm hesitating to do anything in the middle, because if I buy right now without the 33.50 breach, bears can still sell and get their first target here. Okay, and that is 60.30. It is an uptrend, so within the trading range, market is trying to reach this midpoint. If we close above the boundary line, we're probably going to go higher. But I yet to see a bull close. And we still have 1 minute and 45 seconds yet to close above 33.50, a bull bar. 33.50 is the midpoint of bar 2, the bar that we are stuck inside of its range. So you have 3 bear bars sideways, and the bears are selling above the bear bars, right? So you can see how we're in a limit order market. And you can see if I were to buy here, how I would get trapped right there. That's because bears closed below the inside bar. They want their 1R, and that is their 1R. 60.30. Let's see if they can get it. So it's 3 bear bars sideways. We're still in sideways. Bears want down, and bulls want to trap the bears again, but they need a bull close. Bears can still get their target, but you're stuck in this small trading range. They have, to me, they have the priority here. But it is 10 o'clock now, so Fed Wallace is speaking also somewhere, making comments. Bar 6 did not close above 33.50, so that's right there is a problem. But it's a good thing for the bears, and they're still trying to come down and close a bear bar, but they haven't done anything. So still sideways, and they want sideways and down, but they should have closed bar 6 bearish. It's the news back and forth right now that we're getting here. Bears want the 60.30, that's their 1R. And that is the sideways and down price action, 3 bear bars. Sideways 6, down, it went 1 tick below 6, low. Now my question is, Can they finish this job? They just dragged it too long. Bulls trying to prevent bears from coming down and going beyond the 60-30 because they know if they do and close a bear bar below one tick below bar 2 open, is they can get a breakout and come down further to 1.5 and 2R. But these bears earned this, okay, 630. So I did sell that sideways price action, expected a follow through, second leg, and there you go. So that is the 1R right there. We just got the 1R, y'all. So that's your scalp within the range of bar 2. Now, if the bears do get that bar close bearish one tick below 2, they're going to accelerate into 1.5 and 2R. So 1.5 is right around there. So it's like 28.50 or so. So instead of buying okay, I ended up selling. So how did I make that determination? Well, several times bulls tried to get above that boundary line, failed. So this I'm no longer interested, right? This already got a 1R, but it's done. So there you go. They're going for the 2R. And that is where my runner is. So the 2R is 27.25. I'm one tick above. There you go. I just got filled. Excellent. Now, can they accelerate this and come down more? It just made a head and shoulders pattern here, small head and shoulders. I did say that if they do close the gap here and they could come down and test the bar at one low. Now, that's not it. They're looking for this. So I'm looking for 24, 60-24 test. That's, I don't have 3R, but, oh, I do have 3R, sorry, 3R, and then the 4R. So that's your 3R right above the boundary line. Bears want to test the boundary line and move underneath. So I would expect them to give us the 3R and then in the meantime, maybe tag that black line. Buyers in this area. But if selling continues, then my next target will be here. Which is also 1R, 2R, 3R, 4R, and 5R. That's your 3R. Take some profit here. We could bounce, but I think we're just going to tag this anyway before bouncing. We should, okay, excellent. So I have gotten more there, but big bar should get follow through and another leg down. But it's an important area. We could bounce a little bit first because you're at a support and a boundary line that's a support. So what is this boundary line I'm talking about? This is in the course, trading ranges. Al talks about how he divides trading range into 3 sections. So let me clean this up a little bit. So let me extend the line. Okay. So basically, this is the trading range I'm measuring and extending, right? So he talks about, entering in the right place to, just make the best reward. So you enter here and you can see it right there. And I call these boundary lines, he calls them the upper trading range starting point, possibly. I forgot the lingo, but I call them boundary lines, right? So, and when we cannot go above beyond the upper boundary line and the bulls try twice and fail, we're going to reverse back into the prior one. But it's generally, if buyers were there before, we could bounce from there. But if we close a bear bar, then expect follow through to the midpoint of this lower trading range, which is where I marked. Eventually, I'll add those levels as well. So bears want probably 4R, but they need to close a bear body here. They're getting a follow through. That is fantastic. right there. You can also measure measured move right here. This is probably the target, so we can end up coming down and testing there. That is 4R. This is also 5R. So you should be making money going down with the bears. And I tried my best to keep you guys not entering long there for several reasons. I think I beat that dead horse back to life. So hopefully nobody bought there. And finally, that was 3 bear bars, momentum sideways and down expected, except that, I mean, bears really had a huge plan there. So we got the 4R, 1, 2, 3, 4. That's fantastic. I'm going to get rid of it. At this point, you're trailing your stop. You're looking for a 5R, but at this point, I'm looking for mid-range tested, mid-range of lower level. We could not close on the higher time frame. We could not close above the 35.50. That was profit taken began, and then we collapsed back inside. The Globex range is, so what does that mean? It means we could come down further. Now, I need to do a little bit of adjustment here because if I take this, okay, instead of just the wicks, like, yes, these are overshoot, but doesn't matter. So that means I have to adjust this one for accuracy. So I'll take those. And yeah, we can either there or there. So I think that's even better. All right, so no bear bar closing below the boundary line. They're still taking some profit here, but I like to see follow through from bears because bar 7 is pretty strong bar. However, we could still pull back and then look for sellers there and then come down. I like to see follow through. So if this bar closes that bear body in about 26 seconds, then we'll definitely come down. If we fail to close that bear body, we're going to go up a little bit. And somewhere at the breakout test area, 2650 or a little bit higher, maybe the midpoint of this bar, we're probably going to get some sellers and then we can mark it down again. So waiting for this bar to close. Okay, bar failed to close below the boundary line. That means we could bounce now. Bears are probably at the 50% of bar 7, waiting to sell. 50% of the body. Could even go up to the 66, but their job is to keep the gap open and then sell. Okay, we're just about at the 50%. See if there are any sellers here. Now, where are we? Look at where we are. We are at the midpoint of entire range and also the mid-range. Okay, midpoint right there. So anybody who bought, if they had a buy order at the boundary line or bears took profit and then exited and the bulls bought, they're going to scalp here. Okay, so we're going to slow down here a little bit. And this is why these levels are important when you're in a trading range. Bears are trapped below bar 7, so they're looking to sell and minimize their losses. Because they were still selling with 8, so they're trapped. So they want to bring market down to again to the bar 7 close or 1 tick below. %50 of the bar 7 limit bears entered the market, and hence the upper wick of bar 9, which we expected. Now, they're also trying to break even. They want the close of 7 tested. Excellent. So I did sell there at the 50% and I took profit right around the close of 7 and I left the runner just to see if we can close a bear bar and continue to come down. This is my target now, this right here. But I do need to see that bear body, because if this ends up becoming, okay, trap bears are exiting and they're not able to close this bar bearish, then I have to somehow exit out. But this bar, I expect follow through another leg, maybe 2 legs down. But even if you sold here and scalp, you made money. So did anybody actually put a limit order right at the 50% of this bar 7? Yep, great. All right, excellent. So you're pretty much done trading today. You can find something else to do, something more fun, right? I don't know what is more fun than trading, but you know, life should not be only about trading. That's all about. You got to find a good trade. You got to find a good low risk trade. Enter, get in, get out, and then just live your life. All right. So what happened there? Well, I am done. Why? Well, bears are failed to close that bear body. So now bar 9 closed bullish again. So what can it do? Well, I'm sure these bears want that next leg down and want to come down and test the 8 low. But um, this bar 9 made it difficult. Okay, bar 9 closed bullish. As far as I'm concerned, they can now go up and test the 6 low. Okay, that's the 66% pullback. So when I see something like this and failure to close a bear body, I'm not very tickled. But one thing that is going for, notice where the bar, okay, came down, right? So opened here, came down, went up, came down, and then finally closed there. These bears made money, but no, they're not all that happy. Okay, so if this bar now closes, bar 10 closes bullish, I'm afraid we could go right back up to these levels to the open of the day. We have a trading range, so open of the day becomes magnet. Now, bears obviously want to invalidate that, and they want to close a bear bar. Now, I want to sell again, but I'm not liking this situation. We're right at the midpoint. So if you're either holding, you're short, looking for market to come down, test underneath bar 9, test the low of 8, close a bear bar, and come down here, or you just scalped it and be done with it due to this support area. But a bar like this should get follow through a couple of legs down. Okay, this was a bad follow through, pullback. It could still get follow through. I'm targeting this area. So I need bears to now close a bear body below the open of bar 9. So then my target will be not only this, but this. So you can hold it into here, here, here. There's a measured move target there also. So we could end up testing this area before bouncing. So we could test the 2050, 60, 2050. Let's see. It's also a flag, bear flag. Looking for 2050 area tested. See if they can accelerate down. And if it reverses, fails to close a bear body underneath this boundary line, reverses back up, sellers are waiting up here. So when the bears see the second time bears trying to sell but not able to close a bear body, then they're going to give up and the bulls will take over, bring market up here, and those bears will sell up here. So we could end up getting like grind up for a while. So it's very important that the bears do close a bear body here. If it fails, we could end up going right up here. I need that bear body closing below the open of 9. Then my measured move is right here, is mid-range here. That's quick scalp right there, 20.25. I'm at 20.50. I sold again, by the way, and because that bar closed. So let's see if we could get to that 20.50. But I'm really more interested in this target right here. Strong selling from yesterday. Market probably wants to test these lows. There's a gap here. This gap is the problem. Okay. Bulls are trying to keep this gap open. They're buyers here with the bar 49 range. That is the first test, and it's not a good buy signal bar. Okay. So we need to come down and test again and look for another buy signal bar. If the bears actually come down and break this area, there's another gap right here. We could actually breach and find buyers somewhere here. That's why I needed that bear close below this boundary line. Now I got the bear close below the open of bar 9, which is great. So I'm looking for follow through leg for bears to continue to come down at least to 20.50, one tick above the target half hour. And then I'm looking for follow through into 1 hour, or at least to here before we bounce, but we'll see. So right now, I'm just trying to be patient here. Okay, another test with 11, but not a good buy signal bar. And bears still pushing further down, but 11 should have been a bear bar. So this isn't really working out well because of this gap right here. And the second test is, we'll see this as an opportunity to buy, but a bar like 7 should get more follow through. So I see bears bring market down to the 20.50, 20.25, 21. I don't know if they can tag 60.19, but yeah, so still looking for a follow through. Bulls want to get another bull bar and a buy because they see this as a second entry long, but it's kind of, if they do buy here, anybody sold with bar 10 will sell somewhere up here and try to break even, or will sell even higher because of this. This is support. Okay, this is a buy zone. This is where buyers are. So I warned you about the gap here, which they didn't close. There's more gap here. I prefer to buy down here, is not here. But the one thing that is not working out for bears is that they still yet to close that below that boundary line. That's why we're going sideways here. So now disappointed bears with this second leg down, or it could be leg 1, pull back leg 2, pull back leg 3. They're disappointed. They're going to sell somewhere up here, and they're going to break even before bulls take this further up to near the high of 9 or the open of the day, because we're in a trading range now. Open of the day becomes magnet. So many bears, including myself, Now looking to see where I can sell and break even. So I don't want to see a bull body closing. Obviously, that would excite more bulls. I have not added to the losing position yet. Waiting to see if bears can fix this on their own by closing this bar bearish below the boundary line. Then I don't have to do anything. I'll just sit here and look pretty with them. Give me my target around is 2050, 2025. You can't panic. You just have to wait and see it work, because a bar like this wants to get follow through and another leg down, if not two legs down. So I am still interested in lower prices here. Part of the trading is waiting, being patient, and everybody wants to scalp and nobody wants to swing. Swing trading is it requires patience, and especially in a trading range like this, you're worried that it's not going to come down here, and breakouts and follow through is weak. Breakout is nice, but follow through is weak. So you're wondering if you're going to get a micro wedge here and it's going to reverse, and the third leg is going to be very weak. So then definitely scalp while holding the position, is minimize the losses, right? You pay yourself a little bit because of the conditions that we're in. But bar 11 is not a good buy signal bar. So I didn't feel like exiting out of this yet. So as far as I'm concerned, it's still coming down. So this is a scalp right here, 2050, 2025. We do have a close now, bar 12, so that's good news for bears. We are in the buy zone. Bulls trying to get a much better buy signal bar, but bears still have 3.5 minutes to finish the job. Now there's another, let's see. Retest of where the breakout happened with bar 12, but bears need to keep this bar underneath the boundary line and eliminate a good buy signal bar. And if they do get that bull close above the boundary line, then the sellers are at the high of, or the open or high of bar 10. So looking for this bar to close bearish. So 2025 to possibly 1975 area, we could still come down and then continue further down to 1850. I want a test of 1850. So I moved my profit taking down a little bit more. No buy signal bar yet. Bears have 1 minute and about 5 seconds to bring price down to here if they can. But it is still buy zone. If these bears are disappointed, then they will sell again somewhere up here. Buyers were here. So those buyers are buying again because they were long and they're disappointed. So they're buying again to break even. And a good place to buy also. So if this gives up, because the second time the bears are trying, if this fails, I'm gonna have to exit because I don't like, this shouldn't have taken this long to come down more. So now bulls are trying to get a much better bull signal bar. but bears will try to sell at the high of 10 or open of 10, and they will try to get a quick break even before this goes against them further. Really good buy signal bar is for bulls here. But disappointed bears, they are looking to sell and break even. They want market to come down and test the close or low of 12. If they can't sell here, or not many sellers trying to break even, then they're going to sell higher. Like I said, somewhere up here. You can exit if you're worried, because it is a good signal bar for bulls and they can mark this up for a while. And we may not get the bears until we reach the moving average. Okay, so look what happened there. This bar actually came down and tested the close of 12. So those bears probably exiting. Now let's see if more bears will sell around here, or we're just going to go and test the moving average. I would assume we're going to test above the moving average. I've exited, and then instead of selling, I've actually exited for the second time. It came down, and then I bought it. I'm looking for moving average test. See if we can get that. But like I said, there could be sellers here at the high or the open of 10. But I expect bulls to actually push this up a little bit further. Because bears failed. This is a terrible follow through and a really strong bull bar. So I'm no longer interested in this. Can we still come down here? Maybe, I don't know. This is a buy zone right now. They're buying, and we just tested the moving average. Bears want to bring it back down again. They could. And that's right there. So we just hit sellers. Moving average is a good place. They want a double top, and they want market to come down further. And there you go. They did sell right there. So I took a little bit of profit at the moving average in case these guys show up. I expected high to be tested, maybe had a double top with 9 instead. But bears were, no, we're not satisfied with bar 12 setup. So we're going to sell at the moving average and sell at the high of the SPAR that they sold earlier, which is 10. And now they're getting their full break even. If they exit out of the market, we could get bulls, but otherwise this can continue to come down. So that is a fantastic job by bears. Kind of disappointing that we couldn't go any further above the moving average, but I did expected that. So you have to take profit there. Now what? Now what do I do? Well, either bears start closing bear bars here and we continue to come down to that midpoint of this lower range, or those bears will exit out and then bulls will come back in again. So we have a gap open from the close of 14. Bears seem to be showing interest again, but I don't like the fact that they allowed bulls to print bar 13 like that. So bulls want another leg up here. So anybody bought the 13 will buy again, expecting 13 high to be tested again. So that'll be their break even. Difficult morning, difficult open, and bears did a really good opportunity here, but they seem to be giving up. And a good buy zone. Bulls are trying to get a swing up, but if they do that, they really have to start closing bull bars above the 14 high, go and test the 9 high, and then start closing more bull bars and try to close this gap right here. So that's not yet decided yet. I'm not seeing strong bull closes. So here's a possibly this bar can now close bullish. It needs to go and test one tick above 13 to give these bulls a chance to break even anyway, or at least to test the close of 13. So I still expect bulls to try to do that. And if they decide to close a strong bull bar, then I would expect them to go higher. So if any bulls bought here, they see a bar like 14 closing like that, they will minimize their losses. So if they entered with 3 contracts, they will exit out with 2 in loss, and they will hold 1, and then they will wait for bears to bring market down and buy again, and then they will start to buy with good bull signal bars. So we have a bear flag here, and second entry short at the moving average. And bears are now bringing it down to the target, which was, there are too many lines, so I removed it. So it is, they could still come down to 1875, which is the mid range. But bulls are disappointed, so it is a bear flag. Bears want to take out the 8 low. Buyers could still be here, but if we break this area, buyers are going to be in this area, this gap area. There's a measured move here. We could also come down all the way to 1625. So great job, bears. They've done a fantastic job here. Continued. I did say sellers will be here, and it'll probably going to come down. I exited due to this bar, bought it, took profit there, and a 14 close like that, I exited altogether. So now bears are winning this. So 1875 was the midpoint, I believe, and we're just about to test it. So if we're going to bounce, it's going to be right around here. So here is the gap right here. There could be some buyers. If anybody's still stuck above bar 13, they couldn't get their break even, they're going to be start to scale in around here. And then they're going to look for, so here we go, from here they scale in. This is their break even right there. That's their average break even. But let me test that again. Yeah, I mean, it didn't really test, should have come down and test right here. Okay, so it is trying. All right, so it just tested the mid range. Now, if I measure from there, from here to there, this right here, where I'm pointing, is the break even for average break even for bulls. So they might try to get there, and that is 22. 60.22. Bulls trying to reach the 60.22 and higher. So that's their average break even right there, if I measured it correctly. Bears want a 20-point down somewhere here tested. They have a measured move target here. Yes, I did say it's a double top and a second entry, low to sell below 14 or the close of 14. So I did warn you, limit sellers are at the high or the open of 10, which happens to be moving average. So I did took profit there. All right, so there you go. That is, we just tested the break even, and you could see how that was the average price for many bulls who just bought there at the midpoint of this lower level. and look for a quick bounce, get to the safety. So good job, bulls, for buying there into the profit taking and a bounce. Now bears can still sell this. They want a 20 point around 1750 to 1650 area tested. But what if we start to close bull bars above the average price? Then we're gonna keep pushing higher to here. I don't know if we could get there, but bears want to keep this gap open and continue to sell. There is a, let me see if I can, from this high, bears are targeting the 20 point swing is right there, which is right around the measured move target. So we could actually continue to sell. If the bar closes on its low, eventually, then this is going to be a pullback and the bears can sell. But if the bull bar closes above right there, 6022, that'll be a problem for bears. Bears want to come down to 19 or 20 points, so 1 point above this area I marked, or I would assume we're going to test that 20 point eventually, which is also the measured move. So let's see if they can actually sell more. All right, they could not close above the average price. See if they can sell right here and continue to bring it down to 1750 or 1650 area. Bar 16 is a decent bull close. So you can see those bulls are still trying to get back to the actual break even, which is the close of 13, but they have to close a bull bar above 22, 60, 22. So if the second time they fail, bears can take over, and this is still my target. But because this is so low, and remember, I'm going to get rid of this because right here is, I said buyers could be here in this gap area. Those buyers trying to hold it, but this is a strong bar. Bears want to keep that little gap open and they want to come down one more time. So if this was too low to sell, I would understand that this is a pullback and nobody wants to sell in a bull gap or into the support. So this would become the pullback, but we need a bear bar here. Target is 1750 to 1650 area. 1750 to 1650 area we should tag. And we have a measured move right there, 20 point swing right there, starting from 19 point goes to the 21 point. So it's right around that vicinity. It would be nice bears to come down and test. So let's see if we can get that. So close. At least 1750 tagging I would prefer here. But it can come down to 16. Oh, okay, 1715, perfect. All right, I did sell the right around here, and because I knew these bulls were going to exit there, so it gave me a good entry with a pullback, and expected 19 point at the minimum is for bears to come down and claim. That is 1725, so it came 19 plus 1 tick. That is pretty good. That's a swing target. But really, 20 point is a swing target plus the measured move. So we came very close to the measured move, still holding a runner here. And let's see if they can actually sell and finish the job. There's a ledge here, this red line. So market is looking to probably test that. If we continue to come down, okay, market wants to test this ledge, and that's coming from here, Friday. So 20 point swing It's kind of a tight bear channel here. So scalp sizes, so swings are basically is 4 or 5 times more of scalp size. So I'm expecting that 20 point right there, or the measured move right here, which is exactly the same price point, 1650. Fantastic. So we got the 20 point and even accelerating down. I have the 200 EMA, which is almost as this. I don't have the script that I used to have. I have a new computer, so I have to reset everything. I don't have all of the indicators, but this is basically equivalent to the 1 hour 20 bar EMA. Bears want to test there, and that is 6,007. I'm at 6,013, so it might actually go beyond that. So 6,000 is actually what market might be looking to test. This is a strong sell, okay, from yesterday. So I said we're probably going to test the lows. And I'm still looking for buyers here. If we make a new low, because it is a trading range, we might buy that new low. So buyers could be somewhere down underneath the 200 EMA, or we're going to keep selling into this 1 hour EMA. We might test yesterday's low. Also, we're not all that far away. Where is my yesterday's low? Oh, did I delete that? I must have deleted it accidentally. Yeah, I did. Oh no, it's right there. It's just hidden behind the. Yeah, it's right there. That's the yesterday's low. So we might actually come down and test yesterday's low, but there will be profit taking here. So measured move target is met now. So we have is here. If I actually, another way to find your target by using the break-even levels is this right here. So that's the health R, but really this is the target. This is where market wants to come down, low of yesterday, breach the low of yesterday. This is where now bears want. Now, why do they want this target? Because look, this was right here, okay, the midpoint, and they bought it right there. They bought it right there. So they had a break even right there, but bulls could not close above the break even to get to actual break even. So this was average. When the average price holds like this, there's sellers waiting there. So those bulls exit. This is your health R. You need to scalp here, and then you would look for is market to come down to here. High low of yesterday, possibly that's the 1 hour. So we could actually reach there. So they're exploiting the situation, but it's a 20 plus move. So there will be a bounce eventually, somewhere around here. Profit taking, I call it. But we are so close to this, and you can see we just tested the how far, and they're taking some profit there. Now, what if we don't go beyond that? If we make another 5, 6 points up and the bulls start to close strong bull bars, then we're going to go up. But right now, I'm expecting this is their target. So they will probably going to try to push into that. But you take profit here, like I said. Next low of yesterday is right there. We're so close to it. We might need to test below low of yesterday, maybe like a couple of ticks or so, reversing back up. Right now, they're taking profit here. So everything's working out pretty good for bears. 20 point swing profit taken here. But if the profit taken slows down and it's only a profit taken, we're going to continue to come down to the moving average and to here. I'm no longer interested in this. I think that just is done. I am now looking for bears to keep pushing into low of yesterday and here. Plus is swing target on the higher time frame, this trend line right here. So we're probably gonna get to that. Originally, I connected all of these with this, but I mean, either or, we should test around here. All right, we have not closed below that how far, but good job for bears. Now we have 18 bar. Can we actually reverse? But we have a huge leg here. Pull back is second leg. Pull back. We didn't really go above bar 16. So to me, this could be just the second leg itself. And then we could finally get the third leg down. Bears still want to probably mark this down. We're still inside the 20 point swing area. And bar 19 is the profit taking bar, like I said. And bears want to take out these 17 low and continue to sell this further down. But there might be some buyers. I think there were buyers already there, and they try to buy and trap the sellers with bar 19. Now bears want to get a breakout from below bar 18 and continue to sell, but they have to close a bear body here, one tick below the bar 18. So sometimes these reversal 18 bar reversal comes in a couple of bars later, like we need to wait for 24, 22, 20, bar 22, bar 24. There's still room to downside, so I'm not interested in buying anything. This is still my target. So I'm still waiting here. See if they can close that bar below the 18 low. Or are we going to reverse here? Now, how do we reverse back up with the bar 18? That's a micro double bottom, believe it or not. Yep, it is. So we are at the lows. Bears want a new low, but the buyer's probably down here waiting, wanting to buy the new low. Two bear bars. I didn't feel like buying anything there. I'm looking for a little bit more to the downside to the low of yesterday. Sometimes we go up first before coming back down again when we get closer to the low of yesterday, but I have no reason to buy here. I like to see this low breached before buyers show up, so there's still room to downside. We had a lot of time passed already, so you have a nice spike, pull back, and a channel down. Eventually, we will reverse back up to the bar 13, where the bulls got stuck. But you can also find your way around Brooks price action encyclopedia. Al has done his homework over the years and created this Brooks Encyclopedia chart patterns, which is a membership based database. You can go to the members area and then submit. Where's that chart? Where is that? Yeah, right here. You can sign up right here if you have the course. That's a lifetime, one-time payment, $199, and then you have the access. So basically what we have here is a failed bull breakout and the first reversal down, and so you could go here and start to look. Okay, so this is high 1, high 2 failure. You can also, let's see if we can find something here. So this is bear trend from the open, I would call it, or failed high 2. Let's see if I can find it underneath here. Failed double top. This is double bottom. It's not really a double top. So, but you can call this a double top reversal. And, but I'm looking for high 2 failure. See if I can, or you can also say head and shoulders. So that would be under head and shoulders, or you could say bear trend from the open. Like a lot of ways to find it. I'm just showing you the examples here. So always in long bear bars. Everything's organized nicely, always in short. Let's take a look, because we have became always in short with bar 7. So market went up and then continued to come down. So we're not, nope, I'm in the wrong. Here, these are modules. That was only one bar, that's one chart, so that's why it went always in. I'm looking for bear trend from the open. So let's see, bear breakout, bear trend. There's also failed bull breakout, and then it sells, goes to the sell climax, and then it reverses. So this is what I'm looking for. Okay, if market comes down to that low of yesterday, which we are very close, and then even if we breach below that, I'm looking for buyers and then to reverse it back up, because look at it, market was bearish, we went up, we couldn't even take out those highs, and then we came down to start to swing. Eventually there will be buyers somewhere here, and so this is something like this I'm looking for. It could be either we reverse now, or if we close really strong bear bars below the low of yesterday, then we are going to come down even further. Okay, then I'm going to be looking for midday reversal with bar 40-ish. So this can still continue to come down, but depends on how the bars are closing below the low of yesterday. That could bring us down to the 6,000 somewhere around midday, around bar 40. Then I would look for a reversal. But we are in a trading range now. So we are at the lows. I'm looking for a little bit more. This is not enough. I would not buy here. I don't think market is ready to buy. I would like to see a new low made and then trap those bears. You can also say sell climax is, so let's see. It is not the best sell climax, but it's still kind of parabolic. So it's coming down. The nice bear channel. We have several ways of determining whether this is going to continue to come down. So we are in this channel, okay, bear channel. We got the sellers right there. Sorry about that, guys. So we had a rejection. We are finally, okay, so this is a different way of measuring. Now that I could see, we actually did break below the 50%. So I'm expecting follow through. Earlier, I actually drew this channel from here like this and connected. So we were right at the, okay, we were right at the midpoint and we have not broken below. But you can see why I don't use channels very often. It's just so arbitrary. So you can draw them so different ways. But if you really want to draw them tight, okay, like this, then you can see why bears can continue to sell this. They already broke below the midpoint. So is retest. Now, why did this bar went up? Why did this bar go up and then sold again? That's because, now I'm going to get rid of this. This is a sideways and it's a bear flag, but it's an expanding triangle, okay? So you have is the upper trend line bulls want to get back to. You have the lower trend line is bears want to break below, and you have the midpoint, okay, mid-range. So what does this mean? Price can go up to that mid-range. It's like a 50% of a trading range. And then bears will be there. So now bears that show up, they sold, but the 24 did not close bearish enough. Now, as long as we are still below this line, the midpoint of the triangle or the apex of the triangle, we could still sell. We could still come down. This is still my target below the low of yesterday. We might have tested, did we test the low of yesterday? So 1350. Yeah, we did test the low of yesterday. So we have tested the low of yesterday, but we have this target that we left behind. Can we finally reverse? Well, I'm not interested in exiting out of this short, but if we start to get the bull bars above the midpoint, then I'm going to exit because the market can reach back up here. To me, this is still a bear flag. To me, bears are still looking for this target. But we have accomplished something, which is the low of yesterday test. and we did not close below it. So if we fail to close below low of yesterday and we get another bull bar here, we have an inside bar 24, okay? So, but it's not all that great of a close. It closed at its midpoint and it's got a really strong upper wick. That upper wick is too strong for me to buy, okay? So I'm gonna wait for bears to finish this job. So bears are still coming into this target. How did I find this target? Why am I so adamant about this target? Why do I want this target? That's because any bull who got trapped there, okay, both somewhere down here, failed to get their break even fully. And it was only an average break even, and then they exited out the market. So now I am exploiting that, and this is my 1R. So I'm looking for bears to continue to come down. Another way, I could say this is the measured move, and the market can reach down here, maybe. Or you can just measure the gap. Measured move is right there. So just about maybe right here, gap. It's very close to is the target. So I'm gonna hold this until bulls tell me this is it. We're no more going down below the low of yesterday, and we're done here. I don't have that yet. As far as I'm concerned, bears are still trying to go below that trend line. There's also the ledge, which is magnet. On the higher time frame, I have trend lines that we have not really tested. Globex low is right here. So I have no reason to exit out just yet. And I'm looking for market to continue to sell this. Waiting for bears to finish this, but it's a really messy price action here. Bulls are trying to trap the bears right here. Bears is still trying to break below the bar 23. Now, what if bulls actually trap the bears? What do we do? What could happen? Then we're going to go and test this mid-range. And if we start to close above, I'm done. I will be exiting out from this short, and I'm going to say, okay, we have tested thoroughly the low of yesterday, and we're not closing. So now we're going to go and test the 23 high, not 5. Bar 23, this big bear bar. You have an outside, you have an inside, outside, inside. So it's a breakout mode. I'm still hesitating to exit out. We could still be looking for, because it's so low to sell, we could be still looking for a pullback to sell here. But this right here won't make me any happy about the situation. So there's no bull close above that mid-range. I still don't have a reason to exit. They're still holding this, okay? But the moment this bar closes, I'm going to be done with this. Remember, I said with the 18 bar reversal, is sometimes we get the 18 bar reversals very sharp and clean, but in a situation like this, we might need to go sideways. And I said somewhere around bar 22 or 24, which is the end of the second hour, we might finally see some reversal. And look where we are. This is the end of the second hour, the new hour, the third hour started. So we might need to still test the prior hours low. We do have a double bottom here, but I think market needs to test the prior hours low. So I still don't want to buy. Plus, I don't have a bull close above the mid-range. So I'm trying to talk myself out of exiting this prematurely because I still have targets here. So might as well just hang on a little bit and get the target. Here we go. We just got my target. And it just paid off to do all of that crazy work, which is basically charting, right? So we're all chartists and we trade with price action. We don't trade with fundamentals. all that worked out. So now, because this was a bear flag, we finally got my target right there. We got the gap right there. So what did I measure there? So here's the gap. I'm measuring from here. Now, can we actually do better? Can we actually get to this target? Yeah, we might, but I want to see really good closes below the low of yesterday, not just one, but many strong bear bars. And then we could then accelerate probably into the ledge, and we'll probably test one tick below that. And I've been waiting for this ledge test for some time now, right? So this is Tuesday, Monday, and Friday. So, and let's take a look at what could make us bounce here. We still have more targets to downside. There's a bit of a gap here. A lot of big gaps here. So you can see right there, right? I'm going to measure from here all the way to here. This is a gap. Okay, actually, yeah. Okay, so this is the gap. Used to be white, so now that I have a white screen, I'll have my gaps gray. We just reached the gap. We just reached the ledge and this is good. Now you can take profit, but we now have a stronger leg down. You have a leg one pullback, leg two pullback, leg three. Could this get follow through? Yeah, it might. I still have targets to and a room to downside. But what if we reverse from here? Strong. Where are the sellers? Sellers could be at the 50% of the SPAR 26. Okay, so we might need to test that trend line that we just broke and then see if there are any sellers wanting to sell again and move underneath the ledge. But we have pushed 3 times. So finally, I'm thinking we're going to reverse soon. We have reached the 15-minute. I think this is pretty good. So now we could finally, there's a huge gap here. We could finally reverse. So this is getting a little bit too much, I think. We also have 1, 2, 3 wedge bottom here. And we have broken the trend line and we could actually finally reverse. But obviously I'm not going to buy the first bull bar I see, right? The bar 26 is still a strong bar. Could still get a little bit more follow through to downside below the ledge area. So if that's the case, then this area we might actually test. What about 6,000? Can we come down and test the 6,000? What am I missing there? This is the gap, so I don't want to change that. We could definitely test below the gap, reach the 6,000, and then reverse back up. So still nothing to buy. I did say that we're probably going to test the prior hour's low, which we did, and now we also reached the 1 hour EMA. At some point I need to change this because I want this line to be exactly where the hourly 20 bar EMA is. But we have reached there. We might need to test it a little bit more, maybe underneath a little bit before reversing back up. Can market become more bearish? One thing that I want to point out, 20 EMA is still above the 200 EMA, okay? So bulls will try to prevent that crossover. Bears want the crossover. When crossover happens, we could get even more bear bars. Can this continue to come down more? Look, since bar 14, we've been gapping down. It's been only, so 14, 24, 10, so only been 12 bars to downside, okay? We need 8 more bars to downside to create 20 bar gapping. Then we could start to reverse back up. So I am not ready to buy anything. There's nothing to buy here. Market is still making its way down. I've got a measured move target here. I've got a gap here. So I want to see market come down and test this area before I attempt to buy anything. What if the bulls close a strong inside bull bar with almost no upper wick in about 44 seconds? Well, then I might be interested in it because there could be buyers one tick above that inside bar, but I don't have the bar, so I'm not interested. 26 should get followed through and maybe another small leg. So let's see how this, oh my gosh, everyone was trying to reach me. Okay, okay. Brad I might extend this session a little bit as I'm gonna open up the question box. Brad might come in a little bit later, so I'll just wait for him to arrive. And I'll just extend the session for the muted time that I've lost. When market gaps from the moving average 20 bars, right? Eventually it will reverse back up, but it's such a strong move down with 20 bars or so. That creates, if it's a bear move down, that creates a pressure, the first pullback back to the moving average or key price. Probably sellers will be there to sell again. So if we don't get that, then I would expect price to try to get back to the moving average, maybe 2 legs, 10 bars, and maybe even get above the moving average. But we do have a really nice bar 26 here. Not interested in is that inside bar 27. Bear's still trying to move underneath the ledge. I'm not really interested in ledge anymore, so I'm going to get rid of it. Did its work. I do have a trend line possible wedge here. I don't have a good buy signal bar, reversal bar to reverse this yet. This is done with this because it was the bear flag. So I'm looking for a little bit more from bears. Target right there. Now I also want to measure how many points the market moves since this morning to downside. We had a 20 point there, possibly 30 point test right here, but we could go a little bit more, reach the targets, or we're going to come down to 30 and we're going to finally bounce. If we break below the 30 point, generally my target is, bear target is 40 point. 40 point bears is right there. So this is where I would like is market to come down. But that only if the pullback from the 30 point is actually weak. So maybe we bounce about like 5-6 points. That would be profit taking, right? 30 to 31. So it starts at the 29, goes to 30, 31, and then we bounce a little bit, but they continue to sell. I will be expecting is market to give me another 10 points. 6,000 is slightly above 40 point. Looks like market wants to go there. If you read the daily blog, which is if you're new here and you're just finding out about Brooks price action, go to the brookstradingcourse.com and definitely sign in, register so you can get the weekend reports, which we talked about. And then on the blog, I'm just waiting for it. This is daily updated. And if you go to yesterday's blog, we have several of us contributing. This is actually for today's, but let me show you the yesterday's. So that's right there. We have the video updates. Joseph, myself, Brad, and I think more people were adding. I'm not sure Richard is setting that up. So we all contribute, but you could see the charts, yesterday's charts here. Richard actually updated this. So you can see here Brad talked about that 6,000 round number and the market actually pulling back to it. So this is why I'm still selling this and not interested in buying just yet. So, and then we have the intraday updates is such as this right here, today's update. You should always keep your eyes on the blog and check it a couple of times a day. And it could really help you with your trading. Okay, so here is today's blog. Okay. So if you make that a daily habit, you can really improve your chart reading skills and where the market can go. All right, so we did get the follow through. We did come down to just about 30 points, as expected. Bears are taking profit. Now, how much profit are they taking? Now let's find out. Anytime regular scalp is 5 points, right? So an ATR is about 4.5, so 5-point move is expected. It could go 5 points. It could even go 6 points. But if they cannot close, bulls cannot close beyond 5 or 6 points, they're not going to get their 10 points. So this could actually end up becoming just a shallow profit taking and then weak profit taking, and then we could continue to come down more. So it's very important that you mark around 5 to 6 points and wait to see what the behavior is. Sometimes profit taking can turn into a 10-point, 15-point swing up. But first you need to see if the scalp is just a scalp around 5, 6 points and the bulls cannot close beyond that. But right now we're actually going beyond that. Okay, so this can actually suddenly reach to 9 minimum. Here's the 9 point. Okay, and even 10-point mark. Okay, so but first it's accelerating a little bit because ATR is slightly higher than 5 point. That gives some volatility, quick profit taking, but you're still in this channel. We have pushed several legs down, but this is very strong profit taking. Now, if you have a channel line right here or a trend line, if the bulls break the trend line pretty strong, okay, then you can look for a pullback to the trend line and then buy that pullback. But that will happen. So here it is. This is already trying to get to the 9-point minimum. All right, you should mark the 10-point. 10-point is 1 point above. It could get there, take profit, come back down to this trend line, okay, and or the midpoint of this huge bull bar. I don't like it when the bars are this big because it's buying this bar with a huge risk down here, okay, it's not ideal. So you buy this, suddenly this starts to come down because we reached the 9-point. 10-point is right there, and bulls can start to take profit. As you buy here, it could just reverse right back down. But it's a very strong bar. And watch it now, they're going to be taking profit. You end up buying the close, they're going to trap you. So you wait for a pullback to this trend line we just broke, okay? And then you look for buyers again. So it can actually come down 4 or 5 points. You can also come down and test the midpoint of this bar before bouncing again. Well, we couldn't get to this target, but 30 point is, you can see how I resorted into looking at point counting, right? 20 point was a swing and they kept going. Said they're going to get an additional 10 point because the 5 point is a standard deviation on S&P, which is why we call it a 5-point scalp. But 10 point is a swing, so they got additional 10 points. Now profit taking is imminent. So, and this is a very strong profit taking, but I still think that we're going to reverse back a little bit. So this is why when I see market makes one bar 10 point, I don't jump in and buy that bar very quickly because I know they could trap me right there. And any bears that are trapped down here, now they're looking for a reason to sell and bring it down to the midpoint of this bar, bull bar. Okay, I'm going to open the question box because I'm kind of late on that one. All right, go to webinar question box is open. We've tested yesterday's low thoroughly. Can this continue to come down? Yes, it can, but this bar now is a problem. I'm now looking for market to come down, see if we can reach the 50%, see if there are any buyers. That's the 50% of this bar. We could come down a little bit more. Bar 28 is not a good buy signal bar. We might need to come down and test its high, perhaps. And I don't like to buy strong bars like this to reverse the market quickly. And I kind of missed my chance to buy with a market order, as I was explaining. So I saw this bar going up. I could have bought it and then taken profit at the 10 point, but I just didn't have time to click on the button. So hopefully somebody actually took advantage, hit buy market or exit and take profit there. So now we're at the almost at the 50%. We might need to test that 28 high. What if we breach 28 high and come down and overlap with the bar 28 body? Well, then there you go. This is why you don't buy these bars. Wow, look at that. So hopefully, did anybody buy the close of 29? I warn you. Hopefully didn't. But now if you did, wait for this bar to close because you might get your chance to buy at the lower third of 29 and be able to break even. There's still a gap here. There's also the 40 point here. But the problem with this 40 point, I'm not interested anymore. That's because the bulls already made 10 point. Okay, this weakens this bear trend down now. Plus, anybody who bought into it and didn't know anything about the 10 point scalp, now they're looking to enter again and break even. There is the gap area here. If they cannot find buyers here at the lower third of 29, they're going to try to buy within the gap area. All right, some questions came in. Can you please elaborate on the ATR and its relation to point move? Well, ATR is basically your average true range. Okay, this is the only one that I use on each tick. So I want it to update every time price moves. I don't want it to be bar close. I want it to be on each tick because it's important. It's telling me what is the average range of each bar. Like this bar, for example, average range is about 6 points, right? So that's 575 body or the entire, that's about 675. Yeah, about 6 points, right? So that means market can move one time the ATR down or up. Okay, so depending how or where it moves, depending on how good you are reading the conditions. So we are in the small trading range here. It's a limit order market. If you sell this bar close, it could go half the ATR. It's now lowered down to 489, so 475. So it's like a 225, right? 2 points and a quarter. It could actually bounce up. Why? Because this is a small limit order market. Bears, look, bulls bought the 28 close. Bears sold the 29 strong bull close. Now, if you sell the close, this can go against you about 2 points or like 2 and a quarter before coming down, or it's just going to sell about now it's 5 points, 5 points down. There's a double top is at the moving average, so the bears see a bear flag yet again and a channel down. So that's how you have to take a look and see how much they can scalp or leave to run. So 1 time the ATR or 2 time the ATR for swing. Half the ATR or 1 time the ATR for scalp. That's how I use it. Okay, it's just telling you how much it could go up or down by calculating the average size of the bars. All right, so let me get rid of this. Kind of got the 30-point idea, got the 10 right there. All right, so we've been gapping down since bar 14. That was the last touch, but we did not get 20 bars. So we only got about 24, 14 bars. So now we have another touch at the moving average. We do have a double top bear flag, but this is a small trading range here, and market is confused here. They want to continue to sell this because we're below the low of yesterday. We're closing bear bars. We have the gap area. We have the magnet 6,000. We have a 40-point down here. As far as I'm concerned, we can continue to sell. But we now have 2 strong bars, okay, overlapping. But now we have an outside bar followed by an inside bar, bar 29 and 30. Because the outside bar is bullish, there could be buyers slightly underneath bar 29. And the bulls want to trap the bears and go back and retest the upper third of bar 29. Bears want to get a breakout from the low of 29 and continue to mark it down and then reverse back up. So how is this? Is it going to go up? Is it going to go down? So wait for this bar to close. Because if the bears cannot close 1 tick below bar 29, we're going to reverse right back up. We could get a double bottom with 28 and then reverse right back up. But if we get the bear body close, then I'm going to expect follow through selling. And I'll tell you right now where this can sell. If the body closes bearish, it could sell into 0450, 6,002 quarters, or we're going to reverse right back to the 50% of this bar, right? And then sell again. Now, problem here is that we made a new low, okay? So this channel is continuing to go down. Remember I said if there was a wedge here and we needed a reversal, maybe 1, 2, 3, maybe 1, 2, and 3. So I told you guys not to buy this. The reason why you shouldn't buy this, okay? First of all, it's a big bar. Now here, right, I'll take that. And I said, we're going to test the 50%, but if we start to move underneath the 50%, we could take out that bar's low. And that means market is still marking down the prices. We're not ready to reverse. This can come down even more. And look what just happened here. It's with a wick, but we did take out the strong bar's low. So now, if you're still bearish, stay bearish, but be aware, if this bar now closes bullish, okay, we could have a double bottom, get back to the 50%. If we start to close above 50% line of this 29, bar 29, we're going to go right back up here again, maybe to the open, maybe to the high, and we could finally reverse, but only if we get above the 50%. Now the bears sold the inside bar with a stop above. They're looking for lower prices. They're disappointed. So what are they going to do? They're going to try to sell, okay, right around the 50% or somewhere in here. Now, look what just happened here. The bulls closed the bull body right at the 33% of this bull bar's range, but not above it. Maybe, I don't know. I can't really tell where they closed it. But it's a decent bull bar. So now that's a trap. Bulls trap the bears and they want the midpoint tested. Bears who sold, disappointed, they're trying to sell here so they can close a bear body and continue to come down. If this body won't close below the 21%, we're going to go and test the midpoint, possibly up here. Then these bears will sell inside these two red lines. So that's also possibly high one. Bulls are trying to get a high two. We made a new low. So I'm waiting to see who's going to win. Are we going to be able to keep these bears trapped here? So how this bar forward 32 closes is a big deal. So be prepared. If it doesn't close below the 21%, we're going right up here. And then they will try to sell here. Then they will scale in right here. Then these bears will give up, and then bulls can come in. If the bar closes bearish below the 21%, then the bears will try to sell again, come back down to the 29 low and try to get a breakout this time. So this is how I look at things by measuring certain outside inside bars and see what kind of trading range I'm stuck in, is what kind of limit order market I'm in, where are the limit bears and bulls, and how can I not get trapped. So bar 31 is bear trap. Okay, bulls trapping the bears. But it failed to do one thing, which was to close a solid bull body above 33%. So bears are now taking that as an opportunity to close a bear body to continue to come down. And they can very well do that. If they do close this bar like this, I'm going to be expecting them to take out the 29 low. Since they already taken out with a wick, I would then expect them to take that out, come to the minus 11, minus 23. We might even test right here, which is around 6,050. All right, next question. Sorry, I just carried away there. Brad will come in, I think, in about 15 or 13 minutes. Let me know. Where can I find that London article? Michael, just go to brookstradingcourse.com and then in the search box type London, and it's the first article that blog post that comes in, and that's where the video is. If you want to add a winning position, how do you do it? Can we confirm break this bear is channel and reverse for bulls go up? So I've been explaining that already. The best way to do that, well, first of all, bears have been selling it. This right here is always in short. Okay, so market reversed, and now we have a low to bear flag, and market now we have a bear flag extending and selling, right? And we're making gaps. If you actually look at the line chart, there's a gap here, there's a gap here, there's a gap here. So it's kind of parabolic, okay? When the gaps are still open like this, right? The selling is pretty strong. Look, this is the first time bears actually closed the gap. So now I'm thinking, are we done here? Well, we could be forming a trading range. We could still make a new low and then come back up again, but that could form some kind of a trading range. So that right there is kind of signaling me we might be going into the trading range phase because this is the market cycle, right? The trend needs to go into a trading range before it either continues to come down or reverses back up. So, and you can see right here, bulls close the gap and then bears sold again to break even. Now bulls are trying to reverse it back up again. So can we go up? Now wait for this bar to close first because this is still bearish. It's still pretty strong. All right, bears did close bar 32 below the 21%. That is not good for the bulls, if you ask me. They should not have allowed bears closing that body there. So these bears could still sell. So this could be actually a final flag, a triangle right here, right? Could still break down. Now, I just take a look at, okay, so say, I have this channel right here, small micro, it's only 2 bars. First bull bar and the bears are selling. I will sell that, right? So first break of the line, trend line, and the bears are selling already. So that's one. Another one, here is another one. First break, and then is bears again close the bear bar. So market is telling you they're selling these trend line break. This one was not a good of a break, but this one is, and they sold it something like bar 22 selling like that. So I wonder if this can continue to come down. So here's another one. This one's a one big bar, so it's actually breaking the trend line way too much, but it's also getting rejected way too much. So now I'm wondering is if this is another flag, but could be the final flag, looking to reach somewhere where bulls might be waiting eagerly. So maybe that target, maybe gap, maybe 6,000, I don't know. But I'm not ready to buy. This is, however, second entry long probably, but it needed a one more bull bar. So I'm not very happy, don't want to buy against bar 30. And as bar 30 closing like that below the 21%, that just keeps me in my tracks, stopped and not buy anything. So this trap is not working all that great for bulls. All right, let's see. Next question. Do you think this big bull bar is still a big problem for bears, even if no follow-throughs appeared? Well, it is a sign that the bulls are saying something. Look, we're finally printing good bars, and they're in the range of 10 points, but that's all we're doing. Trend is the trend. Once we are below, it's a little bit weak, so let me make that. Okay, so this is the low of yesterday. Once we are below the low of yesterday, this strong, I generally expect about 40 points, because average range of a day could be 40 points. So here it is. I'm still expecting market to continue to come down. Now, where we are, and that is right there. Look, this is the last outside bar followed by an inside bar that we're measured its range. If we get a breakout right there, you see why I didn't buy above bar 31? I needed another bull bar. And then now the bears actually close that bar. There's possibility that we can break out to the downside more. And in fact, this would be the first shallow target, second target, and the measured move right here. And that happens to be just about 40 points, Now, where are we in terms of, we're still at the 30 point. Now, what do I need for market to continue to come down? I need it to close below 3 ticks below 31. The zone, it starts at 29, 30, 31. If we start to close below right here, we're going to continue to sell another 10 point, 9 point into the 40 point. So market can continue to come down here. But if we don't, and we finally trap for the second time, fail to break below the 29 with a bear body, that 0%. If we fail and suddenly bulls do show up, then I'm going to look for bulls to actually close above 33%, get to the 50%, then I'll buy. I will expect bar 29 highs to be tested, maybe further up above, but don't have that yet. There is the measured move target still in play. There's the gap still in play. Okay, you see that right there, bears try to sell and they failed again. They did not break below bar 29 range. They don't have a solid breakout bear bar. So now bulls are trying for the second time, trap these bears. But what do I need for this trap to be successful, or that I determine that it is successful enough so I can start to buy here with a small risk? I need a bull bar closing above 33%, or at least 21%, but there could be still sellers here. That's why those lines are red. So still waiting. I'm not ready. This is still coming down. There's no point exiting out of your short, right? Bears prove to you that they're going to reject a bar like this, and they could still mark it down. Well, John, you say that you, 28, sorry. Oh no, that's not a mother bar. Bar 28 is nothing. because bar 29 is not encapsulated by bar 28. So bar 29 is not an inside bar, okay? Now, another way to find target, right? So I'm gonna get rid of that for a minute. So look at the inside bar 30. We have a bar close, like the third bar, 1, 2, 3, bar 33 closed a bear body. Oh no, actually it didn't. I'm wrong, sorry. Yeah, I'm wrong. Yep, they failed. So bears really didn't close a bear body, so I don't know how far this is gonna move further down. I'm not entertained here by bears. Bulls are still trying to trap these guys. We don't have a solid breakout. We don't have a solid bear body breaking below the inside bar 30. Yes, it's still coming down. It's obviously trying to reach somewhere. So if you're still short, don't do anything, just keep it. But if you're looking for a reversal, don't buy anything yet. But also, if you are flat, don't sell anything, because if this fails, we could finally reverse and you can finally buy. So right now, bears are still pushing this. Could be the final flag. Could it last all day long? Well, we'll find out about that with Brad Wolf. But right now, we're reaching this area. I'm excited about these targets. I'm sure we're going to get some buyers here. We can continue to come down to the 6,000 and then finally reverse there. But I'm worried that there's no breakout. And if this is final move and then suddenly we reverse, I don't want you guys to get trapped here either. Because you needed to sell up here when I said we're going to test the 50% pullback of this bar. This is a swing now. We're gonna mark it down all the way. And all you do is mark those bear flags and sell with them. You see, second 2 legs, bulls are having, or just one single pullback, you can sell that. 2 legs, no follow through bull bars, sell. Even this one. But this is kind of signaling you that finally we might actually reverse. But when? I don't know. I need a good buy signal bar. Now, is what happens? This bar closes bearish. Well, they're going to keep selling. Target is minus 23%. We're probably going to bounce there briefly. At what point would you buy market on 29? You mean bar 29 as opposed to waiting for it to close? Okay, so if it's going above 28, right? So I'm looking for I was looking for follow through, but this is reversing. And if I'm not selling, if I'm not in any kind of a trade and I want to get in, and this bar is accelerating like that, I did actually talked about, I saw the bar going beyond 5 points. That's a regular scalp. And it was accelerating. That's where I would buy. And I would expect 5, 6, 7, 8, 9, around 9 point, I'd start to scalp very quickly because it's happening in one bar. So you have a very limited time, but only if I'm not trading, I'm not short, I'm flat, I'm not long, I'm looking for a quick scalp there. That's the only time I would buy with a market order, and I measure it very quickly and exit around 9 point. All right, so we just reached the measured move, and we also reached the gap area. So we also reached the target. Look, right there. Now, how do we continue down or how do we reverse back up? Well, first of all, we're at an area where buyers are waiting. This gray zone is the small gap here, okay? Now, bears can close this gap and continue to come down. That means I'm looking for either in 3.5 minutes, this is gonna accelerate down to this target and then close this gap in the meantime, or it's gonna bounce, go up, and right at the breakout point, 0%, I'm going to be looking for bears to sell again. If this bar closes with a bear body in 3 minutes and 13 seconds below minus 23%, they're going to get a follow through. Okay, so there is no buy signal. They're still selling. You might want to take a little bit of profit here because you don't know, it could bounce here due to being a bull gap. And you can see they're already taking profit. It can go all the way back up to the 29 low, which is the breakout point, and the bears would sell there once more. But if they do close the bar bearish or start to accelerate, then expect this to be taken out, and it gets us closer to that 6,000 magnet anyway. So let me check with my teammate and see if he is around and ready to join. Still going down pretty nicely, and a nice double top. You can see that one bear flag after another bear flag. Now you have another really nice is here. I'm going to get rid of this for now. A really nice channel here, but look how many times we pushed. There's one, now there's two, there's three, and divided into two legs, leg one, leg two. Eventually market will pull back to the high of 29 most likely, or the 30, but I'm not ready to buy anything. There's no point trying to reverse something that still wants to sell. If the bears can close this gap, then we can even move all the way down to 59.96. And let's check it out. All right, so here is we have moved underneath, went back up and retested. Look, closed bear bars, went back up and retested, came back down. Market is trying to get to the 6,000. So it's got a little bit more room to its downside. Like for example, people always ask me is how do I, trade exploit? Like for example, here is I look at double tops and double bottoms, right? So I have a double bottom here, and I have a double top there, and a 2-bar right there. So when I see is bulls are not able to buy this double bottom, and the bears taking that out. So here's what I do. Hold on, just waiting for connection to be established. Okay, so here is the double bottom. I would put the stop there, and I sell is with the confirmation, which is bar 15. Took out that double bottom. So now my stop can go there, and I'm going to exploit 1R is 2R. Okay, and let's take a look. There is another double bottom here. Say you missed that entry and this is happening. There's a double bottom, there's a double top here, right? So double top now is I'm looking for bears to sell, right? And what do I need? Double top, a bear body, right? That's great. And there's a double bottom, but the bulls are not able to. So then I can put my stop there perhaps, and I go for 1R. 1.5 is reached, but we could not close a bear body. So time to take profit. All right, so we have bounced is here. Let me get rid of that. We have bounced at the gap. All right, so some buy orders actually there, but there is a channel here, micro channel, first break. It is kind of a strong break. So now I said we're probably going to go and test the 29 low. We're kind of accelerating inside. Bears are not very happy with that because they wanted to continue down. Now, the first sign was failure to close the bear body below the minus 23%. Now, the bulls are accelerating this, but where are those bears? Those bears will sell again because they're not happy that they market reversed on them too fast. So what do you think that they're going to do? First sell. I expected it here, but it didn't really go there and close below. So now it's overreaching. So the first sell is here. They're going to sell here, and they're going to try to break even somewhere in the middle. And the second sell, if the market continues to go, it's going to be this right here, the 50%, if we breach the 33%. Okay, so if anyone already sold here, which you can see the upper wick, right? Anyone sold a close, sold again, maybe somewhere in the middle, right? So this is where they want market to come down and test right there. Or anyone sold underneath 34, latest, either or, they're getting a break even, see? So when you use these levels, there's a way to get out of a stuck situation. So when you're trapped, you can easily exit out before it reaches back up to the 50%. So I'm not bullish at all, not yet anyhow. I need to see bulls actually close above 33% and the 50%, then I'm going to expect market to get to the 29 high. Then I'll buy. There's plenty of room there for me to buy and take a little bit of profit here before they try to sell again. Right now, we just hit a limit zone, and bears are fixing their trades, and see how this bar closes in 48 seconds. It can still come down. I'm just waiting for Brad. Oh, here's. Oh, okay. So Brad is ready, everyone. I'm sure I missed a bunch of questions here. You can bring your questions again. I'm in tomorrow after Al Burke's session. He'll be on in the morning, and I'll come in the afternoon, and we can take a look at your questions, whatever is left. All right. No, these are Enrique. I don't know. I butchered your name there. Sorry about that. No, these are not fib levels. These are levels that I use L's here. I'm going to leave Brad in a second, but let me show this to them before I leave. So if you have access to online Brooks trading course, go to the course, okay, and scroll down. So all that I've been reading is basically what I've developed years ago. You go to the bonus video section. Watch these videos. These are amazing. But just watching the bonus videos, you become a very good trader. But the video 15 and video 16 basically explaining how to trade is Al talks about. You see this outside bar, inside bar is. So basically, I took what he was explaining and added my levels. So these levels, their machines read these levels. How did I decide that? Did I ask every machine that how they read this? No, but I've talked to institutions and a couple of people, institutional traders, and they said that, oh yeah, they have, they do pay attention to these levels. So I started to test and test, and I'm using L's range, the 66%, the 33%, 21 and 79 are institutional levels. 11%, minus 11, 0, 89, 100, not 100, but 111. These levels are basically these trap zones that if there's a range, there's a trap zone. From the high of the range, breakout high or the breakout low, towards the inside, the lower, like lower third, there is a trap zone. So the breakouts always fail. 80% of breakouts of any range fails, okay? So I developed these trap zones, and even though it breaks out, right, I always look for those traps, right? So now we breached a trap zone from downside and reached a first target. Now it's reversing back up, but the bears were happily selling. Those bears will want to probably sell again to fix their trades, which they did. I just show you how they did it. Now, if they actually close the bear bar now below the 0%, they can continue to sell because they eventually breach that trap zone from 11% to minus 11 with a bear body. So they have every right to sell and continue to sell. But my job is to look and understand what they're doing or what they're failing to do, because I want to eventually exploit and reverse this, and I don't want to miss it. But if market is not ready to reverse it, I'm not going to do anything. I'm going to keep selling this, right? So watching this video and the next video, you're going to learn a lot about these levels, and then I started to add the breakout levels, right? It's very difficult to trade the inside if you're not experienced. So I recommend everyone wait for the signal. Bar 34 is the signal. Okay, it's a breakout, but it's not a breakout, okay, from the trap zone. They can still trap you. It's still above the -11, but you can sell with a small risk and do a quick scalp. But always expect those bulls to come in and trap those bears looking for a breakout and reverse it back inside. So when that happens, I look at the 50% level. If bulls are actually closing above, now I can buy and expect the test of the upper trap zone and expect bears to sell again, because their job is to prevent a breakout. But if the breakout starts to happen with a solid bull close above the 0%, then I'm going to mark it up and I'm going to expect this shallow target to meet and then further up. So those are going to be my breakout targets. So something that I've tested by using those videos. So if you don't have access, get the access to the course and watch those videos, and then you understand what I'm trying to do here. It's just, I like to measure things and I like to be dead on. I want to see what the machines are seeing so I can be at least 90% accurate of what I'm doing with my trading. Okay. All right, I'm done with my session. I'll see you guys tomorrow afternoon. Bye, everybody.